Good afternoon and very warm welcome. Uh, Journey ahead from India to Bharat. That's the subject, and you have seen that almost, I don't know in percentage term what exactly will be 60, 70, I don't know, percent of Indian mutual fund industry sitting here. This gentleman has the largest AUM, and you have taken over just right now, right? Singh Saab? From State Bank of India. Already they have already been introduced. So I'll just give the context. We have about 1 hour discussion, and we'll take a few questions. We'll not take the questions at the end. So in between, we'll take the questions like we have done yesterday. We had done. So please keep the microphone ready. Only one request is this: don't ask for any stock tips. That you can take it outside. Okay, just on at the policy level, at the macro level, etc. Now it's a very good time. I think the industry never had such a good time. I'm just reeling out certain numbers, very few. AUM 40 trillion, all-time high. Asset under management of the mutual fund industry. Just correct me if I'm wrong. Any of the data. And if you look at this, typically what we said. Bank deposit versus mutual fund. Bank deposit is 175 trillion and mutual fund is 40 trillion. So in percentage term, I think this is the highest ever as a percent of bank deposits, mutual fund AUM. That's one record. Second is SIP. All you know what is SIP, all the advertisements and all. Monthly flow is 13,000 crore, around 13,000 crore. Again, this is the highest ever. We have never had such a flow of SIP. Then SIP accounts, they are not unique accounts. It's not that, it's about 55 million, 5.5 million SIP accounts. But I'm repeating, they are not unique accounts. But again, it's swelling. Mutual fund portfolio, 139 million, 1.39 crore. And unique investors, if you go by their PAN number, then it's less than 40. Sorry? 13 minutes, okay. And I said 140, 139. I said 139 million. Okay, he said 140, close to 141. Acha, okay, 139 million. So that is 1.39 crore. And unique investors, going by the PAN, it's little less than 40 million. Correct? Okay, that's the mutual fund industry. Again, as I said, it's an all-time high, it's swelling. But the other side of it, you see that the top 10 cities continue to attract 60% of the AUM. That's it. So which means we have not gone to Bharat, it's in India. And again, top 10 players led by this gentleman is they are the 80% of AUM. So this is the industry thing. As the subject is from India to Bharat, in insurance also the same sort of discussion is that mutual fund for all, insurance for all. Similarly, mutual fund for all, particularly when everybody, including Reserve Bank of India governor, has been talking about negative real rate. So there is no incentive for the savers to keep their money because the value of money erodes because of high inflation if you keep it within the banking system. We'll come to that later, the nitty-gritty mutual fund versus banks, etc. But the subject is, and we'll start with you, Singh Saab, from there, and we'll go by this. Give just a first preliminary remarks. Yes, it's good time. Folio is swelling, more and more people are coming to the market and all, but still the concentration is in India. No, this is not given Bharat. And why India? Even within Mumbai, probably the Malabar Hills and Warden Roads and Kemps Corner, there are people there. But are you going to the Dharabi? Are you going to the Virar and beyond? I doubt. So how do we actually spread out? Unlike bank, you don't have any concentration risk, right? But we need to spread out. We need to, entire India and Bharat need to get the benefit of that and need to play to your tunes in a positive sense. How do we do it? Have we started doing it? We'll get into the micro issues later. But first round, each of you, starting with Singh Saab and SBI is the largest. Your will be about 6 trillion. What's your AUM?
7 trillion plus.
7 trillion plus. So I'm dated 7 trillion plus. You're the largest player. And then comes ICICI, then HDFC, and then Kotak and Birla. Each of you give us a sense, starting you, preliminary remarks.
Thank you, Tamal. First of all, thank you, Business Standard, for.
Otherwise, you change the microphone. Pick the other one, otherwise for the pen. Sorry.
Yeah. Am I audible now? Yeah. So first of all, thank you, Business Standard, for having me here and here to discuss a very, very pertinent issue, and it's actually real. So my first response is that yes, journey has already started. The whole industry is moving towards the smaller towns, and as Tamal rightly said, whether we are going to Virar or other areas. So yes, the industry has already started going on, and technology is of a greatest help. It's not because we are not brick and mortar people. We have to penetrate into these areas by two means. One is through the distribution channel, through the intermediaries, as well as giving them the technological tools through which we can penetrate into it, and the journey has already started. We look at the numbers, the contribution by these centers is increasing day by day. The percentage has gone up, especially when we look at our own fund house. When we look at, of course, we have a unique proprietary channel which is getting money from the B30 centers, but across the industry, when we look at the numbers are increasing. The trend has already started, and everybody is concentrating on the same. As far as technological tools are concerned, today everywhere, whether somebody is sitting on the Malabar Hills or somebody sitting in Virar or somebody sitting in northeast part of the country, everybody is having the same kind of tools available to them. And people are friendly with the technology. This is a good, very, very good opportunity for the industry. From here on, we can grow very, very well. That's my initial response to your question.
Nimesh?
I stick to only one number, 175 lakh crores, which he talked about. So I feel there is huge amount of money in the country which is waiting to beat inflation, right? 175 lakh crores. 10 years back, this industry was around 10 to 11% of the bank deposits. Today we are 22.5% of bank deposits.
That's what exactly I was telling. Huh?
This transition has been a huge transition. So when I look forward, what will happen in the next 8 to 10 years, right? It is really exciting because this 175 lakh crores in say 8 to 10 years can become 340 or 360 lakh crores, right? If it is growing at 10% per annum. And can we be 1/3 of the banking deposits in the next 8 to 10 years? If we are there, in the next 8 to 10 years will be 120 lakh crores. 3 times of what we are today, from 40 lakh crores. So this journey, we are talking about, and it can happen because there are a lot of young people who have come. The growth, I'll just give our example and that we can extrapolate to the whole industry. This is exactly what has happened. It took us on 31st March 21, we had 5.5 million customers. The total customers that ICC Prudential had 5.5 million. In the next 1 year, we had total customers on 31st March 22, we had 7.7 million unique customers, right? What took me 23 years to build 5.5, in 1 year we were able to build 2.2 million. Where did it come from? The digital journey started, right? As soon as we made it Aadhaar based and we made it onboarding of the customer easy, right? The regulator made changes on which the onboarding became easy. This is the appetite of the market. There is not enough distribution in the country, but there are huge number of customers who want to beat inflation. If you want to beat inflation, you will have to, that 175 lakh crores, somewhere if it wants to beat inflation, it will come to this side. It has happened all around the world, so it will happen in India. And the customers are waiting. It is up to us. And I have realized that we are running risk management companies. We call ourselves asset management, but at the end of the day, when you have to manage it at scale, the scale that he talked about, 7 lakh crores, right? If that is, or we are managing around 5 lakh crores, it is all about managing money at scale. We are running risk management companies. If we manage the customer risk well, because the Indian customer's ability to take volatility, right? Whether we have not seen that kind of volatile say a downward spiral. People have in the last 7-8 years only seen one way the market going. If you see, so I believe volatility will stay. So can we create products which are right when he says Bharat, that we have to move to Bharat, are we creating products which will balance out the volatility that the customer will face in a equity market? So that is one. And what the Indian customer wants, I think the debt mutual funds will really grow from here as the interest rates are also going. So one space that I believe can become really big and we need to manage it well is the debt space of the mutual fund. And I think that's a space where Bharat will also grow.
Thanks, Nimesh. It's a very, very interesting and frank soul searching. You yourself raised the challenges which others I would have asked you later. But thank you. Let's hear Nilesh. Preliminary remarks, and then we'll get into the micro issues.
Sure. So thank you, Business Standard, for inviting me over here. Dada, mutual fund globally is like birbal ki khichdi. It takes times to cook. We grow on word of mouth publicity, on references from the satisfied customers. Our reach is driven by happiness of our customers rather than how much commission we can pay.
Well, all the cricketers are saying mutual fund sahi hai. Why only word of mouth?
Because they all have invested in mutual funds and they are all very happy investors of mutual fund.
That's Nilesh. हाँ. बोलिए.
Globally, we have always seen that mutual fund is like a J-curve or a hockey stick. You work for 15, 20, 30 years to build your credibility, to build your goodwill. And then eventually word of mouth publicity takes over. And as Nimesh mentioned, in this journey, you can't afford to mismanage the risk. In the 90s, mutual fund assets were higher than what it is today as a percentage of GDP or bank deposits. But then we couldn't manage the risk well enough, and hence there was a downturn. We are a pull product, we are not a push product. I have to add value to the customer so that they can give their money to us. We are in the business of managing trust and confidence, not just money. So I have to build my trust, I have to earn my goodwill, which takes years to do, and you can lose it in one single moment. So we will make this journey from India to Bharat. We will make this journey based on happiness of our customer, based on word of mouth publicity, by reducing intermediation cost and friction cost. Today, mutual funds operate at a cost or a margin which is far lower than any other competing industry except NPS. So hopefully, as more and more satisfied customers come, our circle will keep on expanding and will continue to move from India to Bharat.
Okay, we'll get into the nitty-gritty later. Over to you, Navneet.
So the intense effort to penetrate more through the incentivization and the regulatory nudge started in 2014 with the concept of B15, which became B30 in 2018. And where have we reached in last couple of years, and also aided by the 2 basis points spent on the investor education, and you talked about it, Nilesh touched about it. That today 17% of the overall AUM is from B30, but 27% of equity AUM is from B30. You talked about that SIP AUM of 13,000 crore. More than 1/3 of it is from B30 cities. If you look at the folios, now more than 45% of the folios are from B30 cities. In fact, if you look at the growth in last 18, 20 months, and that's where I think technology has played a big part, is almost now incrementally 45% of the incremental folios are getting created in B30 cities. And think about it, while these numbers are very impressive and we have a long way to go, I mean, huge amount of awareness is getting created in smaller towns. Mutual fund sahi is becoming an acceptable thing by every saver in India, but still we are only 3.7 crores. We also have to keep in mind while looking at these numbers that B30 is growing faster than the top 30 cities, but it's not that top 30 has been fully penetrated. and we have no scope to grow there. So investors, even in a Pedder Road or in Bandra or in Borivali or in Mulund or let's say in Chunabhatti, there are large number of those investors are yet to invest. My driver's folio gets created in Mumbai. He did his first SIP last year. And I'm sure there are many more investors. So the total 3.7 crore investors, you have like, that's the population of the two largest cities in India. So we have a long way to go in the penetration, both in the top 30 as well as on the B30. But I think credit to the industry, we have made intense efforts in terms of our physical reach, number of branches that have got opened up in last couple of years in the smaller town, as well as in the investment in the technology and making it easier and easier for people to understand the product and the ease of transaction so that they can be onboarded and can get taken care of. So 3 or 4 things that has helped in this penetration is, I think the first is the track record. As Nilesh rightly mentioned that it gets cooked over a period of time, right? People get belief over a period of time. Now when people can look at the track record of 25 years, how money has got multiplied 100 times in several of the funds, how they have delivered inflation beating returns, that's helping. So track record, I think, is the trust that has got built because of the intense regulation that we have. The transparency, I think, which is absolutely unparalleled relative to any other industry, not only in India, but in the world, the kind of transparency that we follow in our industry, that I think is helping. And last but not the least, I think, is the technology. I think our investment in digital, not only by us, but our ecosystem is really helping us in penetrating more. So I feel very positive of the growth, more so in B30, but I think even in T30, there is a lot more that we need to penetrate.
Your driver, you sold the policy?
I've been trying to convince for a long time, but as everybody else mentioned, and Nimesh gave you that data, I think we keep looking at this number of mutual fund AUM as percentage of the overall bank deposit AUM. But that's not the right way to look at it. The right way to look at it is the fixed income AUM of the industry as percentage of the bank deposits. It has declined in last 3-4 years, Tamal. And the bank deposits were 100 lakh crore. The fixed income plus liquid AUM in India was 10 lakh crores. The 100 lakh crore has become 175 lakh crore that you talked about. We have grown from 10 to around 13 and a half lakh crores. So they still, banks deposits are growing faster than the fixed deposit AUM. Equity is a separate allocation because in the overall household balance sheet, equity allocation was 2.2% in 2014, which thanks to large mark-to-market gain plus the new money and the SIP flow put together and the EPFO money that has come, that's why it's become 4.8%.
Okay. Radhika, as all you know, that Radhika is not only handles the mutual fund, she's also an author, and her book is doing pretty well. That's what she was telling us over coffee. Anyway.
Thank you, Tamal, and thank you, Business Standard, for having me. You know, I truly believe most of us sitting on this dais are very lucky to do the job that we do. And, you know, Nimesh talked about numbers. I only focus on one number of all the numbers you said, and that is that 3.7 crore. The opportunity is massive. It is single-digit mutual fund to GDP penetration when the world average is close to 40%. I do a lot of public speaking, and, you know, as an example, I speak to a lot of armed forces professionals. And at every session I do, and they are typically people in their late 30s or 40s in well-educated parts of the country, I always ask, how many of you invest in mutual funds? And typically the answer out of 100 is never more than 20 to 30. So 60 to 70 is an opportunity. I do believe, I think there are 2 game changers that have happened for the industry as we move to Bharat over the last few years. One is technology. Every mobile phone today in some way is a branch. You know, I definitely represent the youngest brand on this panel. And I think for someone like us to scale up to nearly 1 lakh crores would have been impossible in an era that did not have technology and digital. So technology has made funds far more accessible, even though we are present in only 25 locations. And I think the second game changer has truly been mutual fund Sahi Hai, which doesn't perhaps get the kind of credit it does. Very few industries have all the players coming together to work for a cause and make this word Sahi Hai. Sahi Hai is now part of pop culture. You watch a Netflix show, you watch an Amazon Prime show, and people, Robert was joking about investing his money in mutual funds. We've become part of pop culture, and these are things you can't underestimate. I think there are two things in terms of opportunities that we need to think about. One is that if we have to truly penetrate B30, then thinking about making distribution more attractive. Truly penetration will happen when you have more feet on street, taking the mutual fund story to many parts of the country. And being an MFD has to be an attractive business, and you need many more, you need lakhs more MFDs out there. And Amphi is doing some work to that extent. And the second, I think, as Nimesh said, is that we've attracted a lot of investors, especially in the post-COVID phase. You need to build products and communicate in a way that retains these investors. It's very good to have investors come to the market. You need to retain them. So whether it is fixed income, where actually, in Navneet shared the data, active AUM has not grown over the last few years, whether it is hybrid funds, which don't tone down the volatility in equity, you need to make sure that the investors you have stay, because the first experience is often the defining experience.
Bharat Sahib, you're the last speaker.
First and foremost, it's a pride moment for MF industry. I think as everyone spoke, industry has been serving the nation. I generally call it as serving the nation, in the sense, savers' money which otherwise have been going only into the FDs. Today we can take pride, whatever the size we are talking about, 40 lakh crore size in entire mutual fund industry, 20 lakh crore size in equity. It's a large success already brought in. As each of the speakers mentioned, each passing year, acceptance of mutual fund industry has been only growing. Way of investing is becoming more easy because of technology platform changing. And then SIP is a way of investing in mutual fund also becoming the way of life today. I think there is a huge acceptance that has come, for which a lot of hard work has gone behind this. I think all of us sitting in this forum, number of man hours would have spent along with mutual fund distributors and the channel partners who have been working for the mutual fund industry. They have put lots of man hours. The benefit of this will accrue to the young speaker here.
Thank you, Bala.
Largest. So that's the way I see it. So as the India becoming more and more younger, the significant benefit of our hard work will accrue to them. It's like what we benefit out of the roads, that infrastructure that has been built in Bombay. So I'm not going to use it as much as my kids will be using it. So the same thing happening in the MF industries. So that's something I feel is a pride moment for India. Second is each passing year, we invent something. I think B15, what Navneet mentioned about, this was part of the 2012 circular. 2012 circular, exactly 10 years back. It was visualized that we need a separate policy for investor education, which is the 2 basis points. Second was visualized, we need to take the industry beyond top 15 cities. But as it progressed quite well, as we start seeing success in the cities, the next top 15 cities, then we coined the world called B30. The B30 itself is a proof of the success that has come in those cities which is below top 15 cities, and that's where it came, which is nothing but a step that we are being taken to increase the awareness. So that's where it has happened. So my own belief is, I think Bharat is not far off distance. I think the way things are moving, the way as we go down, I have traveled extensively, not in cities so much, but in the deep parts of the country. So I do have a call system, this thing called Siva Yatra, which I do it personally. The more you go on, actually look at small markets, the awareness about in mutual funds is far higher than what we think sitting in Mumbai, what the awareness exists. Second is awareness about using digital platform is far higher, especially using the banking platform is far higher in the rural cities than we are seeing actually in Mumbai kind of cities. Which in my own belief is the next round of growth for next 10 years will be significantly faster than what you have seen in the last 25 years. Therefore, the number what everybody is talking about, 120,000 crores, 1,20,000 crores kind of size, all of them will become 120,000 crores size, all of them will become very fast. The number of customers base that we have currently talking about 3.5 crores unique customers, my own belief is we will probably have a scenario next 10 years, हर घर में एक SIP होगा, हर घर में एक folio होगा. So that is where I think we are moving. Product, positioning, governance, risk, all of them actually part and parcel of the game. I think the beauty of this industry is after every accident, I mean, you may call it as an accident, you may call it as not managing risk properly. We may probably see, we also come to the attack. We being in the public domain and we become one of the, as Navneet mentioned, the most disclosed industry is mutual industry. Therefore, we are bound to come under attack. No, absolutely no issues. Because if you are seeing it, easy to make for anybody to make a comment. Despite all those things, industry becoming only stronger and stronger because the practices, governance, managing risk, taking care of the investors' interest, and creating more and more awareness is actually rising, which in my view, I think will make industry to become larger and larger. And believe me, the overseas investors, when you go and speak, one of the questions is always asked by overseas investors, when would the flows in the Indian mutual fund industry will stop so that they can come and buy? That itself, in my view, is a big recognition that India has got it. The very fact that our own Honorable Prime Minister spoke about Indian mutual fund industry in the gift city itself is a big endorsement that we got it, which are never as an industry got it ever in our lifetime. So that's something I see it as a big positive, it's a proud moment to all of us. I think we have to just build on it to take it to the entire Bharat.
Thanks, Bala. So all of them are very optimistic, very ambitious, and it will go multifold. And Madam will get the benefit. Bala says that Bala meaning Bala's company is creating the field, and where Edelweiss kind of company gets the benefit. You all spoke about the challenges, the systems, processes, digitization. Nimesh picked up one. I don't know whether you remember, Nimesh. You spoke about debt. Why debt is so low. I was going through the number that out of this 3.7 crore unique investors, 90% are equity investors, only 10% into debt. So can you throw some light? I mean, it's also a part of expanding the footprint. How do you actually, I mean, why? Because mutual fund industry entices them into equity? Or what is the reason? How do we balance it out? How do we get more into debt? Starting with you, then whoever wants to talk, then we will get into some other issues. And we will take questions from you, so just get ready. Yeah.
See, after more than 20 years, whatever good has happened, we took the credit of it. So whatever has not happened also, we should take responsibility for it. I think all our products on the debt side are superior to any other competing products in the industry. On the debt side, I'm now been talking only debt side. I think we need to make more effort. Just because an accident happens sometimes, because mutual funds are subject to market risk, right? And they are transparent products also. Say people sitting on the stage right now, right, have managed debt quite responsibly. And if debt is managed responsibly, because there is a equity, people are used to that there will be ups and downs, there will be volatility. Debt somewhere, we have not been able to communicate that message clearly. I believe the products are superior to any other competing products, but the customer has not accepted it till now. It is a very limited acceptance, but that's the growth area. I think the biggest mutual fund in the country, the biggest business will be the one which manages debt well, right? Because Indians want less volatility, right? So that message we'll use, we have done in the last, say, 10 years. We have sent the equity message very well. I think media has also helped that in a big way. I think we need to educate more in the market that how last 20-25 years of performance of mutual fund industry on the debt side is superior to any of the other competing products in the market. I don't think we have done as well a good job as we should have done. Okay. So that is one of the shortcomings. That,
Yeah.
There was a period where we tried to make an attempt. Mutual fund say, hey, is it only for equity? Mutual fund say, hey, is also for fixed income. And we had almost kept everything ready. That mutual fund say, hey, fixed income be say, hey, as we equally get convinced on at the equity product. But if you look at from a saver's point of view, every savers not necessarily has to only look for wealth creations, which of course comes out of the equity. And every savers also have got the income generation needs. Therefore, the fixed income also becomes one of the largest component of every asset allocations, which generally doesn't get grab the attention of the investors which I think our own belief is ultimately everything is linked to the interest rates where it prevails. Whether it is take US, high interest rates, India also has become interest rates not too high, but definitely is something which is higher than what otherwise would have got about 3-4 years back. So as it happens in equity market cycles, an opportunity even emerges on the fixed income as well. Therefore, mutual funds say hey, is equally applicable for fixed income product as part of the overall asset allocation. I just wanted to mention that from a big picture point of view.
If I can also add, I think out of the 13.9 crore folios that you talked about, less than 6% of the folios are in debt funds, less than 6%. So 95% of the folios, 94% of the folios are only in equity funds. And as everybody else mentioned that there is tremendous potential there. The growth of fixed income funds, I think the government and policymakers must realize is very critical for the development of corporate bond market in India. That bond market will only get developed if the mutual fund industry becomes bigger, because we are the ones over the years, and Nilesh, I and Bala, we have been fixed income fund managers. We have the memories where the markets were in 90s and where the markets are today. Government of India is a large borrower, state governments are a large borrower, public sector units are a large borrowers, and corporate India over a period of time will have to borrow a large amount of money to fund the growth of the country. And for that, a very deep money market, a very deep bond market is crucial. And for that, it's important in a vehicle like mutual fund, we grow that industry. This will be good for the growth momentum of the country. I think that realization among the policymakers that we don't feel happy about the growth of equity alone, that is very, very crucial, because equity ownership of Indian household is abysmally low. How will they create wealth over a period of time? We will get into a retirement crisis otherwise at some point in time. But fixed income is also critical for a variety of other reasons.
No, that is the onus is on the industry to educate. No, you want to SEBI to step in, do something or what?
Kamal, I just
I'll
want
respond to this. Actually, you're saying we don't want SEBI to. In fact, when we are talking, we are taking credit of all good things which have been done by industry. Industry has actually failed to retailize the debt funds into the industry.
How do you do it?
Yeah, that's the question. Now we can do it, because when we talk about the debt fund, it's not only about the returns on the debt funds, but the tax efficiency also, which is huge. And we need to educate people about that. This is responsibility is with us. Now, how to do it? Till now, on the debt funds, the audience of the industry has been the wholesale investors. We have never looked at the retail investors as the audience for this thing in a big way. The way when we are talking about 6%, 5-6% in debt funds and 95% in equity alone, because especially in the smaller towns, there is some education, some awareness there in big towns, but in smaller towns, awareness about debt funds is not there. We have to educate the intermediaries, and we have to do the fair pricing for that. There's the acquisition cost, because we as an industry, we are not B2C, we are B2B, majorly B2B. Small portion come to B2C in direct plan, that's fine. But we need to work on that. I think we as an industry can do much more. It is our responsibility, and we will do that.
You wanted to add something?
Kamal, I wanted to add a perspective, because our growth, I mean, we have seen extraordinary growth on the fixed income side post the launch of a very different product called Bharat Bond ETF and the introduction of target maturity funds. And a lot of research was done here. I think if you look at the fixed income consumer in India, banks have actually simplified the experience for the customer a lot. There are very few decision making levers. इतने time का FD book करना है, इतना rate मिलेगा. Fixed income consumers in India do not understand very much whether it is about duration risk, whether it is about credit risk. When you make products that are simple, that meet goals. So one of the reasons something like Bharat Bond or target maturity funds have scaled up, there are 1.4 lakh crore category, almost I think larger than any fixed income category ex liquid funds in the last 3 years, because you have changed the conversation from complexity about debt to goals, plus we carry the huge advantage of taxation. So I actually believe that in this single product line, we have the opportunity to take FD customers and bring them into mutual funds in a very tax efficient way. And let me give you 2 statistics from our own experience. We launched something called Bharat Bond Fund of Funds in 2019 for individual investors, no real corporate investors. It had 300 crores of assets. Every day individuals pour in money into that, that's 20,000 crores plus today. we hardly had long duration debt assets. Today, of the 70,000 crore book we manage today, about 40,000 crores is 10-year plus fixed income investing. So people are willing to change if we simplify the consumer proposition.
So the onus is on you. I mean, you are accepting that. Any question from anybody you have? Yeah? This gentleman can. Can he have the mic? Microphone is there?
Can I?
Yeah, please. Huh?
Hi.
Just make it very brief, huh?
Yeah. I've got two questions. I'm a mutual fund distributor myself. Fantastic job being done by you. I've got allocation, client allocation across all the funds. And 100% of our business is digital, and it has happened in the last 2 years. So hats off to you. I have got two specific questions. One is respect to equity. The other is with respect to debt. In terms of equity, there is a lot of options available to overseas investors to invest in passive funds like an index or an ETF. Like we have seen that the options for investing in passive funds like an index fund or ETF is still at a minuscule level vis-a-vis the actively managed funds. Okay. The second is with respect to debt. That is, the moment we talk about a debt fund which is going beyond 1 year, that is, people they understand liquid fund, they understand low duration fund. But the moment we try to push it to say medium term or a long term, they instantly relate it to the fixed income, fixed deposit, wherein there is a certainty of getting an X amount. They don't care about the underlying risk or whatever guarantee is being given. But here in mutual fund, we can never say itna milega, itna mil sakta hai. That is always the communication, right? So there immediately there is a switch, and there is always a disclaimer, investment in mutual funds are subject to market risk. So here the fixed income customer, they shift to their preference to fixed deposits than a medium term, long duration, the moment it is going beyond 1 year horizon. So I've got this.
You got your point. So maybe Nilesh, you can take the first one, and anybody, Nimesh, you can take the second one quickly. Then you will get one more question from here. Yeah, quickly.
So at the end of the day, we have to deliver value to our customer. If I don't deliver value, I won't be sitting here. Now, overseas fund managers are not adding value to their investors by outperforming benchmark index. And that's where passive funds have taken off over there. Over here, most of the fund managers still end up outperforming benchmark indices. As long as we outperform benchmark indices and add value to our investors, active funds will do well. If not, then passive funds will do well.
Nimesh, on the debt issue.
See, industry has come up with products which Radhika mentioned, the target return, this one. What are the risks in a debt? You are taking credit risk and you are taking duration risk, right? Credit risk is addressed when you are only investing in Government of India securities or the state government securities, right? So in the, Radhika mentioned a very simple thing. It's very difficult to explain to the retail customer that when interest rates go down, your return will go up, etc., etc. So that is the duration risk. So when you are giving money to the Government of India or the state governments, for what has happened in the past, you are taking care of the credit risk part first in the target maturity fund. Second, you know the date of 2027 fund or March 2026 fund. So there is a duration risk also not involved in that. So to that extent, and to that extent, the duration risk is also taken care of. That is why, as Radhika mentioned, those funds are really taking off. So you are giving some sort of, headlight to the customer as to what can happen in 3 years' time. And that is where the distributor also comes in, right? The distributor can understand that what is the interest rate going on for a 3-year treasury bond or 4-year treasury bond and guide the customer accordingly.
In fact, the largest target maturity funds are the longest duration ones. The largest single one is Bharat Bond 2030 at 15,000 crores.
Thanks.
In your fund.
One gentleman was looking for here, no? Or ready? Yeah,
Congratulations to all of you, because since 1990s I've witnessed that each of you have put in so much effort, and there's been exponential growth since then in the industry. But we have seen that although wholesale growth is there in the debt funds, retail growth has not happened. And the government wants to government and there is a thought process that the bond should be, our Indian bond should be listed in the global indices. For that to happen, the retail business has to kickstart. Do you think the retail business is not being kickstarted by the distributors as such due to the fact that debt fund brokerages are less, much less than the equity fund?
Thanks. Yeah. Abneet, you want to take this? Or
Since there is not much of a thrust to it.
I will take that and then see, it's very simple. Wherever I go and meet mutual fund distributors, I always tell them that start doing debt first, right? If I were a mutual fund distributor, first I would want the customer puts 80% of his money in a fixed income kind of instrument and 20% is the risk. Suppose that is the case, and which looking at the 175 lakh crores that he mentioned, my all discussions will go to that 175 lakh crore number itself. So if 175 lakh crores is in a fixed rate structure, I would only focus on that if I were a mutual fund distributor. Even if the margin is less, the volume will be more. For a mutual fund distributor, if I have got the complete wallet with me of the customer, my propensity to convert into a fixed equity instrument tomorrow will also be more. Right? The banks have already shown that for a bank it is easier to convert because they have the deposits with them. Whenever they feel is the right time for the customer, they are able to convert that into equity mutual funds also very easily. So for a mutual fund distributor to do debt is so important, your scale of business will completely increase. The biggest distributor in the country will be the one who will manage, who is able to distribute debt well. It's because India prominently wants that.
Thanks,
Sorry.
Ramesh. You want to add?
Just want to add, in the biggest component of the banking industry, 55% is come from CASA. All of us know sitting in the room, current account, savings account balance is one of the highest on the base of which the entire banking industry strives for growth. Let us assuming the same CASA is come to the simple liquid fund where Aditya Birla Mutual Fund, an innovator of liquid fund in the country, as the first one to launch in the year 1996. Assuming scenario, somebody had put money in just in the liquid fund, the last say 25 years, would have given the least possible return of about 6.5%, which is 2% higher than the savings account. So this realization, assuming it comes to every citizen of the country, that yes, I have to keep money in deposits, no problem. If I have money lying in the current account, savings account, if that means itself shifted actually to the mutual fund, I'm not even suggesting it to go to equity. That pie itself very large. I think that is where I think one has to realize what is the loss I'm incurring on not investing the money even in a liquid fund. If everybody start realizing it, that itself will give a bigger level of understanding and the growth.
Thanks, Bala. Yeah, Singh Saab, you want to add quickly?
But I absolutely agree with you, madam, that the brokerages and the intermediary cost is very, very less. In case of majority of the debt funds, we have to rationalize this. This has to be fair. This doesn't need to be equivalent to equity funds, but it could not be 5-10. That we agree, and we agree with your point. If we have to retailize, we have to make a fair pricing on this.
Okay. I think this gentleman, yeah.
When we shouldn't look at like equity and debt as purely like two different asset classes which have to be kind of participated in through two different funds. One of the good things that industry has done along with the distributors is promoting the whole concept of hybrid funds, where what you are trying to do is simplify it for the investor, where allocation is going to both equity as well as debt in the same fund. So whether it's a balanced advantage fund or hybrid equity fund or hybrid debt fund or asset allocation fund or some of the solution products, etc., or equity savings, all of these categories are targeted towards that, where investor, instead of allocating to a different fixed income and a different equity fund, is trying to do in one single fund, where idea is to get returns which are better than fixed income and volatility which is lower than equity and one single product. Having said that, notwithstanding that growth, still there is a lot more we need to do on the fixed income funds as a pure debt fund category, looking at the 175 lakh crore. And plus the insurance, where money, lot of money going into insurance actually is the money which should go into the fixed income funds.
Thanks, Ramneet. Yeah, gentlemen, quickly, yeah, very brief question. This is the last question, then we'll go back.
So when you push all mutual fund industry, when push or sell in the big towns, big cities, you compare it with the FD. When you go to the Bharat, second category, third category of the towns and the rural area, there the surplus fund being invested, not only the FD, but there are competitive avenues are available, like gold, livestock, and farmlands. So those people will compare how much return they will get from those avenues and then the mutual fund. So only technology will help only when he decided to invest. But there is a personal repo, the personal meeting should be there with those people so that they can understand the nitty-gritty of the mutual fund working.
Thank you.
Can I take that? I think it's a very important point because we are only looking at the fixed deposit of 175 lakh crores. 32 lakh crores is cash with public. So last year on Independence Day, we launched an ambitious investor education program called Barni Se Azadi. This is the money which is there in the kitchen jar of women to be like kind of used for a rainy day, and that money is not earning anything. And 32 lakh crore at a time where UPI has reached the level where 10 rupee can be given to a beggar, or you can buy a 30 rupee ka dhania through the UPI. Why do we need so much of cash? Why liquid funds should not be much larger than where they are today? And that's why I said, I think along with the policymakers and the entire ecosystem, all the stakeholders need to think rightly. And I think Dada, in your paper, front page ads in all the pink papers few months back, that there are 10 crore people invested in crypto. Have you done that? And we heard the governor, what he mentioned about the crypto.
Correct.
So our competition is not only with the bank deposit, but variety of other instruments. And that's where I think we all need to work together.
Thanks. So quickly, we have about 10 minutes plus 11
can
minutes.
I add
odd.
something?
Yeah, please, you add and then.
See, we are trying to change generational habit. So Volvo came out with seat belt. And because it was life-saving innovation, they didn't patent it and made it available to every car manufacturer. It was saving life. The cost was $29 at that time. And yet people were not accepting it. Because we were trying to change generational habit of driving car without seat belt. People does not necessarily do what is right for them. They need to be guided, they need to be educated, they need to be taught. Gold is an investment habit for thousands of years. Fixed deposit is backed by the implicit guarantee of Government of India in bank. Mutual fund is about transparency. We are giving daily mark to market, which people are unable to understand. But we have to be like Lage Raho Munna Bhai. Keep on trying. One day we will succeed because truth is with us.
Thank you. So you will take you will take the when they are moving out off this stage, you take the questions. So we have about 7-8 minutes more than the break. Tell us one thing we are seeing of late. There are challenges, as you say, challenges in terms of products, processes, and everything, and of course, fighting it out with other asset classes. But one thing you are typically don't talk about, and let me bring that out, and I would ask maybe Nilesh to throw some light and somebody else is the lack of talent. Of late, I just name some of the guys who have quit: Prashant Jain, Madhu Kela, Sunil Singhania, Kenneth Andrade, 4 of them, star fund managers and all. They have quit mutual fund industry. They have not quit the managing money business, but in a different AIF and PMS kind of things and all. So am I exaggerating the problem, or is there talent is an issue at this point of time when you want to take a big leap forward?
So undoubtedly, the talent is an issue. In the 90s or 2000s, when we were managing money, we didn't have to worry about alpha. We were so consistently generating it. It was like Sunil Gavaskar playing in Ranji match. He was hitting balls at will. Now our own alpha generation has come down as markets have become competitive. Now if I need to add value to my customer, I have to have the best resources. And mutual fund industry has to attract talent. Today, there are challenges on that side. Globally, we have seen that private equity and hedge fund attracted the best of the talent because they really paid those talents, and which is why many offshore fund managers on mutual fund side are underperforming benchmark index because they are not getting the right talent. They are all going to private equities and venture capital and hedge funds. In India, we have to be competitive, we'll have to attract talent. And there is obviously need for next Prashant Jain, next Madhukela, next Sunil Bhai in the industry. Hopefully we'll continue to attract talent, because this is one industry where not only you get paid for your services, but you also get blessings from your customers if you have done well. ऐसे और दुआ दोनों मिलती है यही इंडस्ट्री में.
You don't have any plan to quit, right? No? Huh? What?
He wants to
Dada,
benefit from
I don't have a
Bala's work.
choice.
Okay.
I think also
Lighter wine, and a lighter one, I would say, you mentioned about some of the best talent across the industry. हम लोग सब यही इंडस्ट्री में लगा हुआ है एक्चुअली. It means लगा रहते हैं अभी भी. Does it mean that we are not a good talent?
Navneet, you wanted to add?
No, I think it's the institutionalization of processes that industry has done over the last 25 years or so is something to be taken credit of. Of course, there would always be a few individuals who will always be remembered for the long service they have given to the industry. But I think at an industry, with the help of the regulators, what all of us can take credit of is a lot of institutionalization of processes. I think Nimesh mentioned very rightly, the asset management is actually a lot about risk management than money management. And I think that's where a lot of progress has been made, and we have to be at it.
Radhika, you want to add? So money,
No, I would only add one thing. I think, you know,
you need to pay. Nilesh was saying that you need to pay more. Is that the right solution?
no, so I'll tell you the good and bad of it. But for all the sort of legends who are exiting the industry, which is natural, I actually think a lot of young talent wants to join the mutual fund industry, including from platforms like PMS and AIF. Now, as Nilesh said, alpha is difficult on the mutual fund platform. For every 1 rupee you earn, 0.2 rupees also goes into your own schemes. There are large amounts of disclosure. Compliance is extremely high. All of that happens. But I think the opportunity to make a public track record, when we interview, and we are a young team, largely people in the 35, 45 bracket, the opportunity to manage public money, to have a public track record. You know very few famous AIF fund managers, but everybody knows Prashant Jain, Sunil Singhania, because they have been out there and managed public money. So I think people work for a little more than money. They work for name, legacy.
You are talking like a publicity bank chairman. the pride of running the bank. Yeah,
I
Nilesh.
think I don't feel that's an issue, because at ICICI Prudential we have learned to manufacture fund managers. Right? We have never in my mutual fund
And to
business.
manufacture fund manager.
That's what I'm saying. I'll just see, India's in our mutual fund space, right from the time that Nilesh was my CIO, we have never recruited a ready-made fund manager from outside.
Okay.
Fund management is all about building a culture over a period of time within the organization. And as Navneet said, the processes and institutionalization of processes takes place. In the last 20 years, some of our funds would have changed hands 2-3 times. But the consistency has remained. So it's ultimately, so what we have done is that you create a huge teams inside the company, let them be analysts for 10 years, going through various sectors. At the end of 10 years, if a fund manager leaves the organization, there are 10 people ready within the company to take up the fund. So it has not been missed. I don't think the mutual fund industry, look at the last 1, 2, 3 years, the performance of the funds have been good. The star fund managers have gone, but the performance of those funds have not got affected.
Okay, thanks. So I just want to have one more very, very interesting development, what I am watching. And I would ask Singh Saab to start, and then if anybody wants to answer this and all. It came again and again during our discussion, this thing has come up, is this bank deposit versus mutual fund. And some of you said that how one needs to attract the deposits and all. As I said, 175 trillion, the pile of bank deposit versus 40 trillion mutual fund, is the percentage term is the highest ever. Now, if I look at the 3 large funds, SBI, largest, and then ICICI and HDFC, and then Kotak comes there. So I was going through the AUM under management versus their fixed deposit. Versus their deposits. Like in case of Kotak, it will be 55, 56%. right? In case of State Bank of India, probably 20% plus, other things and all. So tell us,
What is this 20%?
I said your A, because your
to deposits.
deposits about 26 trillion or something,
Yeah, okay.
and your
Yeah,
7
we are
trillion is
20%,
this,
yeah.
so more than 20% and all. Now, what happens is, that's not only in India, even overseas also. If I'm a depositor, meaning I have a banking relationship, my banker always insists that after certain level, till I need to keep that money to get certain priority, benefits and privileges and all. And the moment it goes up, the bank tries to push me, put the money here, put the money there, put the money there. They are not interested in keeping as deposits because they think that it's a fee income that they earn. In India too also that is the case, right? But now we have a situation in India where credit growth is 17% plus decadal high, deposit growth is not matching it, and we are staring about a gap, and people are exploring how to fill in the gap. Do you sell your excess SLR to generate liquidity? Do you go to market and use capital, etc., etc.? Now tell us, it looks like the banks which run their mutual funds, it looks like, do you divert the money to mutual fund and earn fee income, or do you keep the money with you as deposit and earn the NIM, net interest margin, by giving loan? Is it the kind of situation now Indian banking system is facing?
No, I don't think so.
I'm asking you and the other, whoever you want to do this, because this we have never seen, at least in my career, I have never seen the kind of, the deposit lagging so behind. And yesterday I was telling, I was coming back on Western Express Highway from the airport to Bandra. I found, I may have missed something, 17 billboards of different banks are asking you to give your deposits. Somebody is offering 7.5, somebody offering 8%, so on and so forth. It's something unprecedented. I have never seen that before. So at the same time, you are talking about eating into bank deposits. So how do you balance the two?
No, I don't think that the kind of impression which is made that the banks are pushing their deposits into the mutual funds for earning the fee income is correct, because in banks they are making a NIM of 3 to 4%, whereas on the mutual fund they make hardly 1%. That's at the highest level. If we look at the total pie of a bank distribution, on an average it will be less than 1% only, because they are selling mutual funds and equity funds and debt funds both. Second, this impression that the bank run mutual funds, it could be Kotak, it could be SBI. Just to give you a perspective, in our business, out of 7 trillion business, only 20% comes through the banking distribution from the proprietary banking channel. It's not that 80% is coming either with B2C or from the other channels, which are equally important. Nobody can afford to have only one channel and grow this business. Today, when you look at it, the overall cost of deposit for any bank will be around 6.5%, and their total earnings are much more than that in the credit side. That is number one. Number two, when we are talking about the 9% growth in deposits, we have to also understand that out of 9%, 6 to 7% the capitalization of the interest only. Only 2 to 3% growth is happening. In case of mutual funds, if we take out the mark to market, our growth is much higher. Penetration is happening, it starts from the top going down. Our growth will be 10% plus, because our industry is today 16 to 18% growth in the last 3 to 5 years. So looking at those numbers and looking at the capitalization of the mark to market, so mutual funds are definitely growing much higher than the bank deposits. That's a fact. Because the people are not very interested. When you talked about the billboards, yes, they are facing a lot of challenge. Deposits are not coming, and credit requirement is much more. So
Yes, you are on a bank.
Can I just give one data point? The largest AMC in the world, BlackRock, was managing $10 trillion at the end of last year. The largest bank in the world doesn't even have half of that as assets. So the largest AMC is double the size of the largest bank in the world. Now look at India. The largest bank would be what, 40 lakh crores versus the largest AMC is 7. That includes EPFO money and few other things as well. So we have a long way to go in terms of penetration.
Right.
Also,
Right.
I mean,
Just sorry, I don't interject and all. But here the difference is the largest AMC and the largest bank is the same entity.
But so for the bank, there is a choice that if you are not providing the right choice to the investor and saying that be only in
Exactly.
this product, there are 70,000 or 80,000 other MFDs, there are thousands of other RMs.
Exactly, but that's what I'm saying. Now,
I don't think that makes a
exercising
difference
this
that largest
choice.
AMC and largest bank are in the same. That this is because of so many.
Anybody
other-
wants to add anything?
Well, I just add to what Navani just mentioned. Just look at the evolution of mutual fund industry in the US. From where it started, maybe in 1983 or 84, today the mutual fund industry size, like BlackRock and others put together, it is much higher than the total bank deposit size in the US. That basically the more than 1 time of the bank deposit size in the mutual fund industry exists, which is a combination of equity, fixed income, hybrid process, money market funds as well. Assuming we have to believe and we are in the similar trajectory we are moving in, I think time will come, increasingly the acceptance of fixed income, as all of us are talking about, will keep rising. There were more and more investors would start choosing the other product other than FDs, which is basically you can call it the lazy investing, or maybe you are not aware about other alternatives. Today, the aware about alternatives are actually rising faster than what you would have seen maybe about 3 years back. Which is what I think will make the trajectory actually on the uptrend.
Yes, Nimesh. Essentially, what I want to know is this: when the banking system is facing this kind of mismatch, so does it make your job more difficult to get money into the mutual fund, taking away the money from banking system? That's what I want to say.
I'm just
Please.
relating to the last point you
Yeah,
said.
yeah.
The largest bank and the largest.
Yes.
I think what Singh Saab has done is great for the mutual fund industry per se. When State Bank of India mutual fund is getting in money, when SBI mutual fund is getting money, today he is getting the money, but they are able to convert customers who would have never invested into mutual funds into mutual funds. So I am very happy when State Bank of India mutual fund is growing, because when today the customer is buying State Bank of India mutual fund, tomorrow he'll buy ICICI also, HDFC also, so they are getting new customers in. So they are doing a fantastic job for the industry. That's what I feel. So it is not and ultimately the customer decides whether he wants a deposits or a mutual fund, right? The bank is not jumping to sell them. We should go away from that. A bank is jumping towards, for a bank, a deposit is much more valuable, right, than selling a mutual fund. That's what he referred to, that the fee is not that relevant as relevant today. And with what is happening in the market, next 3 years, I believe that there is going to be a huge push for liabilities for everybody. Mutual funds are also going to say sahi hai, and banks are also going to push big time their deposits.
Radhika, you wanted to have the last
I just
one.
wanted to say that, you have to give credit to DP and SPI when they launched a balanced advantage fund NFO, and a lot of us have done work in the category. The number of consumers searching for the word balanced advantage fund tripled on the internet. That finally benefits all of us. So we are all talking about India to Bharat and expanding the industry. If they can take SBI Bank's reach and help all of us, then due credit to all of them. I think we should be very happy.
So Bala said, Bala and people like him created the industry, and Radhika is taking advantage of that. And now everybody, Singh Saab, I don't think anybody how old are you in this profession? 10 days, 1 month into the mutual fund industry?
Me,
Took over just?
I'm for 25 years.
No, you took over as the new position
Yeah, it's almost 6 months now.
6 months. Have you got this kind of public applause, the applause so much? Everybody
No,
is
I've
saying,
got a
"Thank you,
lot of
thank you,
public
thank you."
bashing also.
Give a big hand to Singh Saab. So I don't need to, we have already exceeded time, so let's not summarize. Everybody knows what are the challenges, everybody know what is the way forward. I'll ask all of you to, why don't you just say ek saath ek baar mutual fund sahi hai. Bol dijiye ek baar mic par. That'll be a nice way to conclude. Boliye sir.
Mutual
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 fund
fund sahi hai.
And one more, if tomorrow you need to create one more slogan, you said no, घर घर में या SIP, वो भी बोल दीजिए एक बार, घर घर में SIP बोल दीजिए।
हर घर में SIP.
चलिए, so with that note,
दादा हम
end-
कहेंगे SIP करो मस्त रहो.
Okay. SIP. Ajay, who has coined this term, mutual fund sahi hai? Which agency is? Which agency has? It's your term or some agency?
Right time, this JWT.
Huh?
JWT.
Acha, okay. So mutual fund sahi hai. Give them a big hand.
Amphi.
Thank you.
Yeah, Bala, you should take
Amphi did that.
credit as Amphi.